Hi, welcome to 2-Minute Explanations. Today's video is going to be on the balance sheet. As with all 2-minute explanation videos, the purpose is to keep it simple. So first, let's look at the accounting equation. Now, the equation is assets equals liabilities plus owner's equity. Now, this is the basis of the balance sheet. In order to better understand this, let's look at the individual parts. First, assets is all property and capital owned by the business. Liabilities is going to be all debts that the business has on their books. And then owner's equity is simply going to be assets minus liabilities. Now let's take a look at a balance sheet. This is a very simplistic balance sheet, but should be sufficient for our purposes. Now if we look at the top, you'll see the balance sheet is as of 12/31 of a certain year. This is because the balance sheet is a snapshot of the business on a particular day. It is not for a period of time like an income statement would be. The first section of the balance sheet is going to be assets. Now if we take a look at the first line, we'll see cash. Cash is simply cash. The following line is going to be accounts receivable. This is the amount of money that the company is owed from a customer from providing services or goods. The next line is going to be inventory. Inventory is the amount of goods that the company has on hand and has not sold yet. The following line is going to be property, plant, and equipment. This will be the equipment the company uses to make the goods. This will be any property the company has, such as a building that houses the equipment. It could also be the land if the company owns the land that houses the building. The next line is going to be accumulated depreciation. This is a contra asset, so this will actually be subtracted from property, plant, and equipment to get net property, plant, and equipment. Now, if we take total assets, you'll see a total of $175. Now let's look at the liability section. So the first line here is going to be accounts payable. This consists of any expenses the company has incurred but has not yet paid for. For example, if the company received an electric bill for $20 but has not yet paid the bill to the electric company, it would go here in accounts payable. The following line is notes payable, which consists of any debt instruments the company has taken on, such as a loan. Now let's look at owner's equity. So the first line here is stock. This is the amount the company has received from shareholders and provided stock for. The next line is going to be retained earnings. This is the amount of net income that the company has earned over time and kept within the company. Now, if we sum total liabilities and owner's equity, we will come to a total of 175, which is the same as the total assets. This agrees to the accounting equation we were looking at earlier. Assets equals liabilities plus owner's equity. Thank you for watching this video. To see more 2-minute explanation videos and learn about complex business topics described in a simplistic manner, please subscribe below.